All right, so thank you so much for everyone coming. So we are going to talk about swing trading today. All right? So just normal disclaimer, I'm not a financial advisor, not a consultant or any, so please do your due diligence, and all this presentation is just for entertainment purposes only. We're here just to enjoy and share. All right, so let me share with you guys my background for those who you don't know about me. I started in 1999. If some of you are as old as me, that's during the whole .com boom, right? All companies were going online. And I started off with an e-commerce company. It was voted Canada's fastest growing company. I was working in Toronto at that time. When I joined that publicly traded company, it was $1.50, and in 6 months, it went to $15. Wow, right? So this is my first exposure, and I was thinking, hey, this is so easy, right? This is all at that time is buy anything with a .com afterwards, or same thing, buy crypto with meme coins these days. Buy anything and it will go up, and yeah, sure it did, but then obviously we know what happened. So over the next 3 years, and I found that was my first exposure to trading the financial markets, and I thought to myself, if I just knew what to do, if I just knew the knowledge and obviously gained some experience, these opportunities are there, right, at that time. So I quit my job, and basically dedicated 3 years trying to find out what's the secret sauce. What are people doing well that I want to be able to replicate? And over the next 3 years during that time, I talked to so many people, like I was obsessed. I traveled to New York, talked to hedge fund managers. I talked to people who were very successful, trading certain options, certain Forex, trading other. So trying to figure out what's the formula so that I can replicate them and also achieve the same success. So I tried many, many different styles. I tried scalping, where you go in and out, in and out. It was also a very profitable strategy, but it's not something that you want to even consider nowadays because of the algos, all the speed, right? Speed is not the issue. Then I started day trading, trading tech stocks. I started using options, futures, Forex, and then, obviously been exposed to crypto, the past 10 years. And then when I look back, what's my most profitable type of style? Swing trading. And swing trading, what I realized over now my 26th year, is the easiest way to make money in the markets. Okay, so that's what I really focused on, and it really changed my life. And I will talk more about swing trading. So I've been trading for about 26 years. Also started teaching people exactly what I did 7 years after I had success. And I'm very, very honored, to be speaking at a lot of expos, Money Show, Traders Expo. Also had a chance to speak to a lot of groups. And really, I'm here to share my knowledge and share my experiences with all you guys. Okay, so today's agenda, 4 things. One is, why should you swing trade? Okay, if you're not convinced about swing trading, I'm here to hopefully give you some ideas and maybe have you consider that swing trading is a great trading methodology or trading approach. Also, I'll share with you some swing trading strategies, specifically what you can do and take away today, and maybe perhaps incorporate into your own trading. I will also share with you the process that I go through in terms of putting together a swing trade. Okay? And any questions that you guys have, you can definitely ask me, but we'll try to keep most of the questions at the end. All right? Sounds good? Everybody excited? All right, so let me kind of just ask you, what do you guys think swing trading is? What's swing trading?
Trading with the market.
Trading with the markets? Okay, good.
Trading with the trend, holding it for long.
Trading with the trend and holding on it. Okay, and Mila?
Holding it for days.
Holding it for days. Good, good. Anything else? Harry, what do you think?
What's swing trade?
Yes, swing trading, yes.
Swing trade is a trade that you've been exposed for a few days to a few weeks.
Few weeks, okay, good.
Buy
So-
low, sell high.
Buy low, sell high can work, yes. But it can also be incorporated into investing as well, right?
Yeah.
Yeah, investing,
Very
yeah.
I look at it as sort of like a macro view. I mean, because you're taking a wider lens at like what's happening in the markets and what's driving those trends to try and follow, and then I guess have an exit strategy.
Yep, good, yes, that's right, that's right. So,
Isn't it sometimes referred to as momentum trading? Same thing?
momentum trading is a form of swing trading, yes. So very, very good, yeah. So let me just, and I'll go into more in depth. For those who are not convinced about swing trading, why should you swing trade? Well, if you have been looking at NVIDIA, right, just in the past year and a half, from 2024, it had a rocket year, 187%. And then in 2 months, it went down 30%. Then in the fall, went up 50%. Then recently, if you may have heard the news about the tariffs, went down 40%. And then you may have heard that they retracted a lot of that stuff, and now it's back up 45%. So do you think a swing trader is an ideal market environment for NVIDIA? What about just looking for some of you guys, the S&P 500, just the index itself? Last year, from beginning of 2024, up 30%, just buying and holding. Everyone's done quite well.
Pretty good.
Pretty good, just the index.
No stress.
No stress. Well, we can think of that as that way. And then obviously with the tariffs down 20%. And then recently, back up 18% and climbing. So even just on the index itself, is swing trading possible, right, to generate good returns? Now, I asked ChatGPT, if some of you guys are investors here, I asked ChatGPT, what is the average return in percentage per year for an investor in the stock market? And ChatGPT, always very obedient, or always very listening to, to everyone, says to me, average annual return in the stock market, and assuming this is focused on the US markets, the long-term historical, based on the S&P 500, the nominal average return is 10% per year. If you adjust for inflation, okay, 7%. And what they said here is this average includes bull and bear markets, war, recession, tech booms, crashes, all that stuff over a period of 80 to 100 years. So do you think, obviously with knowledge, obviously with experience, not here to say that you blindly, but if you know what you're doing in swing trading, can you outperform the index?
Oh, yeah.
Yeah.
I'm glad you said that because that's why you're here, right? If you're not, perhaps this workshop's not for you.
So I would say that data right there, that 7 to 10%, even people who are doing it blindly can earn that return.
Yeah.
Right?
Yeah.
So I guess the question is, why can't professional money managers beat the market?
Yes.
Because I don't think their statistics are better.
Yes.
So that's why I'm doing it myself.
Yep. Very, very good question. I'll answer it in a very simple way, and we can obviously discuss afterwards. I know a lot of money managers, a lot of fund managers. I can tell you, and I told this to Sanjay, I had a really good friend who's managing over $100 million in Toronto. And during the tariffs, he was messaging me, what are you doing? Yeah, what are you doing? Are you participating in this market? Yeah, right? But day to day. Now, if he were to buy during that crisis, right, the tariffs, and he lost money, do you think their investors would say, why were you exposing my capital to that risk? And I can tell you just recently, he then bought back in. well, I'm not, sorry, I won't know for sure, but there has been a lot of fund managers now buying back in because the tariff news is somewhat muted or priced in, right? So they don't buy uncertainty. That's why, because, and we'll show through the index chart here, while it's free falling here, right? The low was April, beginning of April. Would you being a custodian responsible for your investors, would you just go blindly in? Now, certain managers will, based on valuations or certain things, but will you, right? You wouldn't. So if you follow the S&P, maybe you would may only get in here. The fund managers will get in here, so they miss part of that drop. That's also one reason why. So it's not because they're stupid and you can outperform. It's just that they manage lots of money. They can't be as nimble as us. So that's why we as individual swing traders can be more nimble with our entries and with our exits. Okay. So that's why it is possible to outperform the index if you know what you're doing. Okay? Now, I asked you a question. I said, can you time the market? What do you think? Can we time the market? Because people say, yeah, sorry. Pro traders? Okay, pro traders can.
With all the tools now with AI and stuff, I mean, even I'm now using different AI tools. I just want to see how good they are.
Okay.
I'm finding that some of the responses are pretty good. So I'm hoping that maybe there is new tools like that average people can access, so we can be part of that participation.
Yeah, and sorry, in today's market conditions, in today's society, we have so much tools that we have access to. When I first started, I'm reading books, I'm talking to people, I'm talking to investors, not even traders. I'm looking at my encyclopedias, like going to library newspapers, right? When I first started, because so there are opportunities, and based on the volatility, based on information, because things move so quickly up and so quickly down, there are opportunities. These two couple, a couple, yeah. These two beautiful couples said one of the strategies is buy fear, right? Buy fear, and we'll talk about sell greed, right? So buy fear. If you bought any time in 2009 during the financial crisis, do you think you have made money? Yes. Do you think that was it March 2020, the peak of the COVID pandemic? If you bought anything, would you have made money?
Yes.
In 2022, now this is a little bit harder, right? With lots of fear about inflation, rising potentially interest rates, would you have been able to participate? Question mark, right? For some of you, right? But there were signs, okay? The other thing, right? Sell greed. In 2007, this is where I did incredibly well. This was a time where we talk about the four horsemen. And as before, like you may have heard the Magnificent Seven, right? So the four horsemen, Amazon, Google, Apple, and BlackBerry, right? Those were, you close your eyes and you buy in any of them, they will go up. And everybody was talking about them. What happened in 2008? Yes, yeah. Can we have predicted that? No, of course not. But when there's so much media hype about these companies, and your grandma, some people coming off the street, hey, have you heard of BlackBerry, or have you heard, or
But was
you know,
BlackBerry,
right?
was that by the financial crisis? Because that was like those credit default swaps.
Yes.
That caused the.
Yes,
the Lehman
correct.
failure. But RIM was basically, they got outsmarted.
Yes. Correct. Yeah.
In my opinion.
Yeah, yeah, of course. So it's not, yes, they believe that, Apple wasn't a competitor.
I was just saying, I'm a teacher, I was just saying to one of my students, I said RIM used to be an important company in this country, and I said even Obama, I said, had a crackberry.
Crackberry, yeah.
And I said, look at how, that wasn't that long ago, because kids can remember that. And then I said, but now everybody's not using that technology anymore.
Correct.
And so, I mean, I think RIM just got outplayed.
Yeah, that's obviously, that's a different story. But what I'm saying is that was at the peak, where everybody was making money with these ones.
I think that is one thing that you said right. If everyone is talking about it, then I think it's time to sell.
Yes.
If your grandparents are
That's
talking
right.
about it.
That's right. Yeah. And look at the next one, pandemic stocks. Zoom, right? Peloton, Moderna, Pfizer, what else? Sorry? Netflix, right? Netflix, yeah, but but Netflix also done very well, right? All the pandemic stocks. Look at 2021. After that, do you think some of these companies, deserve that type of valuation, right? So that was a time to sell. And 2024, right? Again, easy to look back. This is maybe a little harder, but the Magnificent Seven, right? Apple, Google, Amazon, Tesla, Nvidia, Microsoft, right? And if you look at some of the charts, they pull back a lot, right? So that's just a simple strategy if you are just patiently waiting. Now, do these opportunities appear every year? No, right? But when they do appear, you can capture the bottom and capture the top. Or at least, again, not necessarily buying right at the bottom and not necessarily selling right at the top, but in between, right? Okay, so one of the aspects that we look for swing trading is we buy the hot sector. We buy where money is flowing in. And what do you think the whole premise recently has been? AI, because AI will transform our lives in some certain extent. And it's pretty scary how fast it's advancing. And if you were able to buy some AI stocks, this is just in 2024. All these have some AI related, and you can see the returns have sometimes, especially Palantir and Nvidia have been big winners. So you follow the money. Where is the money? Where is Wall Street putting capital? So I'm going to share with you one aspect in terms of swing trade. This is a chart of gold. There's a simple saying, a gentleman, very experienced individual, taught me this like 15 years ago and says, if you're looking to buy an asset, look from the left and look to the right. Okay, as simple as that. So we look at gold, it's been consolidating, it held, and this is where we as technical analysts or technicals, we look to see that prices have been stabilizing around the 2,300 area for April, May, June, July of last year, and it started rising, okay? Then it hit a resistance level around 2,400, 2,500, basically consolidation, and every time that it came down, it's making a higher low, right? It hit this resistance again, hit a higher low, and then basically we broke out. Stabilized, held this area, would not go lower, and then went on a nice run up, and then pulled back to this trend line here, went up, hit this resistance around 2750, Tried twice, couldn't, but held this line, slowly, gradually went up, and then we had the terrace. That's where it parabolic up.
Yeah, it's the same thing.
Yeah. So one aspect, which we'll go in more detailed, is look at the price action. Look at where the money is flowing. Look at see where markets are not going down, but they're going up given the whole market was going down during the tariffs, right? So it was a safe haven asset. And we are right now around 3,300 above, and given what will happen,
Probably gonna correct is my guess there.
could, we don't know,
Yeah, we
right?
don't know.
But we'll see if this rhetoric continues, if we see gold has a safe haven. So what the point that I want to get across to you guys is think of how is gold went parabolic because of its being a safe haven, right? Safety when everything's going down. Let's see if it still continues to go up based on fear. If it is, keep buying, right? If it isn't, given lots of turmoil, what's that also signaling to you?
Markets are gonna go up.
Okay, market. Well, I mean, yeah, market. But if gold's not going up in bad, fear basis,
Yeah.
then what's really going on, right? And also, lastly, is gold is priced in, typically the most commonly traded is priced in U.S. dollars. So also, do you think what's the U.S. dollar been doing since this whole thing? Falling, right? Because people are pulling out of. They're not looking as the U.S. dollar has a safe haven currency, and traditionally it has been. So if gold is priced in U.S. dollars and U.S. dollars is going down, what do you think it's going to go? Up. Bitcoin's priced in U.S. dollars. What do you think Bitcoin will do if U.S. dollar continues going lower? Up. Get my point?
So basically, the gold price indicates that US loses its power?
Because, well, one aspect, right? Because gold the main way that people buy gold is in U.S. dollars. So if you think of it, if the U.S. dollar is declining value, would every dollar that you buy in U.S. dollar, would you be able to buy more gold? Yes. Right. Yeah. So that's one aspect that we look at. Now, I'll say one thing is, if we see that U.S. dollar is strong, like suddenly recover, everybody, the Oval Office guy says, hey, I was just saying, right? Markets recover, U.S. dollar recovers, and gold continues to go up. What do you think gold is treated as?
It's a proxy for the US dollar.
Yes, could be a proxy, but if it goes up, irregardless of a strong U.S. dollar,
It's still in safe haven.
The replacement for the US dollar.
Fear.
so you could be a replacement, right?
Hedge.
Yeah.
Inflation hedge, right? There's other reasons. So it's basically saying this, it's super strong despite the currency which is priced in rising in value.
Oh, so there's
So it could be lots of things, right? It could be demand. It could be lack of supply, very little gold being dug.
or
right.
lack of confidence in the US dollar.
But then what I'm saying, if the U.S. dollar is rising, so obviously
Confidence.
there will be confidence, right, in U.S. dollar, but also gold continues going up. 3 keys to trading, swing trading success. Okay, there's a 3-step process. Is first of all, come up with a thesis. What do you think is going to go up in value? Right, you talked like some specific sectors, right? Come up with a thesis. What's the reason? What's the behind it? Without looking at the charts, but just an idea, like where some of the ideas that you come across on a day-to-day basis, you maybe see a restaurant or a store that such huge lineups out the door. Do you think their financials, do you think their company would be doing well, right? So you have ideas, right? you start off with an idea. You start off with a thesis. Why do you think something will go up in value? And why do you think something will go down in value? Okay? So rather than me give you previous examples, and again, here we are for entertainment purposes only, I want to give you a real example of something that we are considering right now, me and my students. Okay? Have some of you had Chipotle Mexican grill before? There's 4 now, right?
Yeah.
I got exposed to this company in 2010 when I was living in New York, and they went public around 2000. I think it was 2007, and the lineup was like out the door, and I literally ate there almost every week. Okay, it was good. So for some people, it may not be as healthy, right? But it's sort of healthy, right? Healthier, fast casual. Okay, they serve quality ingredients. They've designed a system where they can serve 1,000 customers per hour because they're not having a big menu. They're a very automated process, right? The thesis that I'm coming with this idea is, given what's going on in the economy, maybe people eat out less but still don't want to cook, is to go to some of these non-sit-down restaurants, right, with a server. It's a little bit more affordable, okay? And also the focus on health, right? Eating healthier, not going to McDonald's or Burger King, right? Going away from that, okay? One of the things also researched is they plan to double their locations this year from 3,600, they didn't say specifically the time frame, but they expect to grow it 2 times, from 3,600 locations to 7,000, and specifically it's international, okay? They are putting a lot of focus also on the Middle East, okay? So it's a stable company. It's been around, I think, it started off, I think, in 2003. So it's been around. It's not a high-risk restaurant. There is a loyal customer base. And have all of you eaten there or tried it? Yeah? Okay. So, I mean, it's not like super great, but it's healthier than maybe looking at going to McDonald's, right? And also, we've looked at not relying specifically on analyst targets, but there is a $70 price target on it, okay, above the current price. So I came up with a thesis. So we came up with a thesis, hey, let's look at this as a potential swing trade, okay? It's just an idea, okay? Now, the next step that we go through, we assess the financials, right? Because if we plan to hold something over a longer period of time, shouldn't we look under the hood to see the financial health of the company? We should, right? So I had one of my students who is a CFA and used to be a CFO for a company. Do this analysis. He did this whole financial performance summary. So the positive is strong and steady historical growth, continued expansion with new locations, and for a financial guy, he finds the valuation attractive versus the 5-year average. So over a 5-year period, the valuation is undervalued 50% if you were to compare over 5 years. So the financial snapshot that he looked at just recently in the first quarter of this year, earnings reported, their growth trailing 12 months year over year, 12.6%. So it's strong, but slight slowdown versus the 5-year average, because 5-year average, they've been growing at 15.4% year over year. The growth outlook is 12%. It's also strong, but again, slightly below the 5-year average. Their earnings, their EPS, earnings per share, their growth is 20% in the last 12 months. So it's strong growth and improving. The outlook, what they are projecting plus 2 years, so basically next year and 2 years out is 17.1%. So they still continue to grow, projecting. Valuation, okay. Not here to talk about specific The PE is price to earnings ratio, what a price relative to its earnings is. TTM, the trailing 12 months, is 46%. Okay, so slightly lower than the 5-year average. Also, the forward PE, 43, so slightly lower. So historically, their PE ratio is 75, very expensive. So valuation-wise versus a 5-year average, they are undervalued 50%. So that, for a financial person, this could be a value play. Liquidity, so we look at debt levels, 1.3 is moderate leverage, and interest coverage is, can they cover the debt? So they can easily cover. Now the biggest things, obviously, there's never everything all pro, not everything all con, but the negative is decline in same restaurant sales, right? That's the biggest trigger.
That could be also due to saturation.
Could be saturation, yes, could be saturation. Also, one aspect is food costs. They're rising, right? Also, despite they are considered a more premium fast casual brand, so there is some risk there, right? In terms of, well, I just won't go out to eat, I'll just cook at home, right? So that's been the biggest thing. And then the other thing is margins-wise will be hit more because of rising costs of food.
How many other restaurants you said?
Yeah, they're trying to expand internationally. So that's one attractiveness. Okay, so the last thing we look at, okay, so the story sounds pretty good. Valuation sounds pretty good. Financials sounds pretty good. The growth is pretty attractive. Let's see, is it the right time to buy? So the third thing is we look at the chart. And what's the chart saying? Now, obviously, I just shrunk it a little bit, zoomed in, pardon me, is they used to be really, really high, but they did a stock split as well. They announced a stock split last year. Yeah, it used to be over 1,000, yes. Correct, yeah, good observation. So it's been on a downtrend since the beginning of this year from a high of 66, and we draw a trend line. It's highs, right, trying to go back up, cannot make previous highs, trying to go back up, cannot make previous highs, down, down, down. And it's broken this just recently, given kind of the timing with the tariffs. And now we are basically stuck in this range along this short-term trend line. So from a technical standpoint, and again, you can make your own decisions. It can be an attractive entry. Definitely a much better attractive entry here than up there.